Hi folks, just wanted to come on and do a quick position update in Beyond Meat. So what happened was BYND, I came in, I was short 3 calls. I was short the September 200, 205, and 230 calls. So my position showed me short about 30 deltas. So as the day unfolded, the stock was up before the open, but quickly after the open, it kind of tanked, and so that was good for me, seeing as I was short. My whole position was short these calls. So we can see here on the chart behind me, if I sort of blow it up, we can see that down move right on the open, boom, and like I said, I was short like 70 deltas or something, so down 6. And I was looking to kind of lock in any profitability. So what did I do? Instead of either buying in the calls I was short or buying some stock, what I did was I sold out of the money puts. So stock opened around 162, 161, and it cruised all the way down to about 150, and around 153. I looked at the SEP 105 puts, and the market for the SEP 105 puts at that moment was 1150 bid at 1250. So what did I do? I offered them in mid-market, or a little above mid-market. So the market for these puts, which let me move out of the way for a second. So the market for these puts, which you can see here, the SEP 105 puts at the time was 1150 bid at 1250. So I offered them kind of mid-market at 1220. Didn't get filled. The stock was once again around 153 and change. Then it started to rally back up to 154. So I came down on the offer of my put. So now I offered the puts at $12. I offered one put at $12. The market, there was a book, 1170 bid for 15. I offered them at $12, $12.10, nothing happened. Then I offered one put at $12, filled. Sold one put at $12, came back in, offered another put at $12 right away, filled. And then the third put, I tried to offer at $12, nothing. The stock rallied up a little bit. I was like, uh-oh. And I hit that book. There was 1170 bid for 15. I sold one more put. So I sold a total of 3 of these 105 puts for an average price of $11.90. That changed my delta from being short 70 to being only short like 30. And so now I turned being short out of the money calls into being short a strangle at excellent prices, because I was able to sell the calls, ride the stock down several dollars, and then sell the puts against it. Now we're rallying back in the stock a little bit. It's now 157.23 bid, so we'll see what happens. But so far it's been a really profitable day. I was able to just, like I said, leg into this strangle at excellent prices, and we'll see where we go from here. If we look at the delta right now, let's take a look at my delta right now as we are starting to rally back. So my delta right now is short 37. Short 37 deltas, and we're beginning to rally back, like I said. Now only down $3 on the day. So there you have it. That's the deal. And essentially the position is I need the stock to stay between 105 and 200, essentially. Look at this big rally back here. Well, what I'd like to see is just this rally fade out. And if we back the stock up a little bit, we're going to see we see these big move up, big move down, big move up, big move down, big move up, littler move down. And it's slowly making smaller moves up and smaller moves down. And as that happens, the option prices volatility should come in, and thus I should be making some money just on as volatility comes in. That strangle, the price for the strangle is going to go down. Right now the strangle is worth, well, it depends on which one you look at, but one of them I looked at that I'm sure it was worth $17. So that's $1,700 each time. So, we're talking 3 strangles here that I'm short. It's, a little bit less than $6,000 that we collect if this stays in between those two prices. And, it's not necessarily to ride it out the whole time, but it's just as volatility comes in. We look at September volatility now by month on the screen. And once again, I'm in the way, so I'll move over. And it says on the side of the chart here, 97 volatility. Now that was up around 100, 102 on Friday. So this, they are taking volatility down. If we do look at time and sales, I was showing people how to look at time and sales couple on Friday. So if we do go to analysis tab and options time and sales, and we start to look through what's trading today, we can see this big trade, July 60 calls. Okay, the market was 590 bid at 710, so it looks like someone sold them at $6. That's very close to the bid. So somebody sold a whole bunch of these calls. So that is, when people are selling calls, that to the customers selling calls to the market makers or to whoever's out there. As the market makers buy more calls, they're going to start to lower the price because they want it to pay less and less as more sellers come in. So you have a big seller of 491 calls here, so then they'll lower the price a little notch. If we have puts, I can't tell if this put trade is a seller or a buyer, but the more sellers come in, the more they lower the price. And with the stock moving around less and less over time, as you can see, this big move, down 32, up 40, that's becoming down 20, up 10. And as those moves get smaller and smaller, the historical volatility of the stock is less and less, and that justifies them to lower the options prices. Now, we saw with Tilray, them lowering and lowering option volatility. It was up at like 130 or something, and now look at it, it's 62, 75. So, this one really got cut in half over time as the stock settled down and became less of a mover and shaker. And, it really is, it's hard to maintain the excitement and the movement of this thing that spiked to, $300 and back within a couple days. It's hard to maintain that level of excitement and that level of people being like, oh, I got to buy it. Oh, I got to sell it. Once you've been doing that game for a couple weeks and you get stuffed a couple times, either on the buy side or the sell side, you can become less enthusiastic about reaching, and that dampens the volatility. Things calm down, people move on to the next great thing, and the volatility comes in. That's kind of what I'm banking on with Beyond Meat. So we'll see what happens with it, but just wanted to give you a little update. It seems to be rallying back. I wonder if this is going to rally all the way back to unchanged. My position would like it if we stayed back down around the 155 area, but you can't always get what you want, and but just happy that this is down on the day, and happy that I was able to sell some puts near the bottom, the lowest prices of the day, to kind of lock in some of the money I made on the down move. So we'll have to see what happens here. The problem right now for me is just that the higher this goes, the more buying power being short those calls takes up. And so best for me if we just kind of stay within the range of like between 158 and 152. The perfect thing, if we look at the delta right now, I'm short 38 deltas, but if you look down at 142, I'm long 6 deltas. So it would be kind of almost perfect for me if this went to like 145 and just sat. Now, everything doesn't happen perfect in the marketplace. We know that. But if it just stays down on the day here and just kind of hangs out, then that works for me too. Anything where it's just staying calm is going to dampen the volatility, and the strangle is going to come in. So I hope that gives you an idea of sort of what I'm thinking about. And my hope is that by watching me sometimes do well, sometimes do poorly, you can at least get a feeling in your mind about what somebody who's trading might be thinking about. Now, I trade differently than other people do, but the more people you're exposed to, and the more trading styles you're exposed to, the more you can craft your own style. And and your own star will come out. Alan Franken says, you mean sell put and then lock profit buying put? Oh, no, that's for another one. Alan Franken, would love for you to join my group and share your content, major market moves. I'll have to check it out, Alan. Thanks for watching today. And for all the rest of you who are watching this, probably at a later time, thanks for watching and thanks for your support. Good luck to you in all your trading endeavors. And we'll see what happens the rest of the week. We'll see if volatility stays this low. The VIX has come back up slightly. We're off the lows in UVXY and VXX slightly. And to clarify the question from SD Investing from before, my point with the VXX spread was to sell like a 22 strike put and then buy a 25 strike put against it. So not buying the same put back for cheaper, but actually creating a spread at advantageous prices, because you're selling a put for a high price when we're down lower, and then after a rally in the VIX and volatility, we're buying another put against it at a lower price relative to it, and thus creating a spread at advantageous prices. So you're making money on the way into the spread, then you're anticipating a down move to make money actually on the actual spread, and then you'll try to have advantageous prices when you get out of the spread as well, if possible. Now, obviously, we can't always leg into a spread at great prices because the market doesn't do what we want it to a lot of the time, but we can do our best to try and figure out what the next best move in the puzzle is. It's kind of like, putting a puzzle together piece by piece, and you kind of just figure out, okay, what's the next good move to do? All right, so there you go. Thanks for this. There's just a quick update. Talk to you soon. Good luck on your own trading.